Okay, Sunday the 8th of April. So the first thing is I hope you all had a good long Easter break. I wasn't at the charts last weekend. I was playing around on motorbikes and getting myself very dirty and falling off a good number of times. So what are we going to be doing today? Okay, we're going to start off as always with the FTSE 100. We're going to analyze the market, look at the key areas for day trading the week ahead, and then we're going to move on to the Euro US dollar. Going to start adding that market in, see how it goes. I really like it. I really like watching the Euro US dollar. It's a nice moving market, especially for day trading. Okay, so FTSE, first of all, what are we looking at? Really, the FTSE is giving mixed messages until we get a little bit more confirmation. So what I've been looking at is the market breaking down or trending down, like this. So we've tested fairly strongly here. We then tried to break down, we tested and we failed. We broke up, we've tested, and now we are attempting to break up. So it's a relatively small trend channel. Not too key at present, but what I'm looking at is the potential for this false breakdown right here. And now we're starting to break up. Now, the false breakdown right here, if we remember all the way back, these are the key levels that we were going over. Let's just mark a couple of them in, where we were happy to start looking for buys after such a strong move down on the FTSE. Really all the way down to here. So these two zones right here. Market comes down. This is a gap down over the weekend. Testing, and then we get that strong move up. Now, we're starting to break up. However, we've got very key resistance up above, and really need to see some sort of confirmation before I'm going to come out of being more neutral. A great area to look for it is back at this previous swing. It's created a nice, strong swing point before we've had this break up. It's basically, you know, putting it on a plate for the bulls if the market starts to make that pullback. What have we got? We're around about 7,080. Down toward 7,045. If we are going to hold this break up and the market's going to start turning more bullish, it's a really good area to start looking for it. If we see that pullback, especially if it starts lining up with this sloping support and resistance level right here. So coming into next week, if we see that pullback, yeah, really good level to start watching for those potential bounces. Now down below there, the very key levels remain down here. So we're about 6,880 to 6,870, 6,855 to 6,824. Those are those very key levels that we went over a couple of weeks ago. Market has held there already, confirmed that it's holding as support, and we've had a nice strong bounce from the level. Down below there, we've got a bit of a midpoint, which is around about 6,980. Actually bring it up a little bit toward 6,990. Really, it needs to come all the way down towards 6,956. One here. And then we've got the level down towards 6,930 at 6,910 right here. So these are really the day trading support levels down below. But the main one for me is right here. If we see the pullback and test at this level, it's a good area to start looking for those bullish bounces. You know, if we're starting to fail here, it depends where we're lining up, you know, what day it is if we're lining up with this sloping support line. If we start to fail here and at the sloping support line, I'd then be happy to start looking for weakness once again and movements back towards 6,990. 6,990 again is a very good level of support to start looking for bounces again, but we'd then be careful of the sloping, what would then become resistance. Now up above, we have numerous areas of key resistance. Well, let's put in another little support area right here, 7,090 toward 7,120. Again, this is a very key level. The reason I like this one a little bit more is because we've got a very strong swing point that we've broken up above, and it's potentially lining up with that sloping support and resistance. But up above here at 7,120 down toward, let me get this right, 7,120 to 7,090. Again, it's a good level. You know, we've had the spike up testing, the spike down testing, and we've got this previous little swing. But for me, as I've mentioned, this remains the key one right here. Now up above, really the important levels are pretty easy to spot on this chart. We've created some nice clean swings. We've got one here, 7240, really up to those highs at 7260. Right here. Then we've got this whole area up at these previous swings, coming back into the round number, 7300. Really, although we've had these swing points here, for me it's a little bit lower. I'm going to say 7330. For me, this is the key area right here. So if we're coming up, key resistance, then if we're starting to break above this one, it's worthwhile looking for those bounces higher into the previous highs, because then we're really starting to break out of that lower low, lower high movement that this market has been making. Above this level, really the only thing that's stopping me saying a much stronger rally up toward these levels right here is this big ass intraday, not intraday, big ass daily gap right here. Very often act as support and resistance. So we do want to be careful of this level. If this wasn't here, yeah, up toward this level. But at present, definitely caution trading into this level until we start to see how the market is going to react when it comes up and tests here. Where else have we got? Let's have a look. So when I'm doing these support and resistance levels, what you can see is I'm just putting the line on and I'm just looking for the sensible areas. You can usually see them without doing it. 7200 right here, again, that round number. Down toward really 7180 right here. Now I've had a couple of spikes up on this market also, which is tested at, let's have a look, the high 7220, the high 7216. You know, we've got the reactions. It's worthwhile having it on your chart like this. But for me, main areas, this one right here, 2 and 3, and also this one down here, 4, and then when we get back down to these lows. So let's put the arrows on them down here, here, then we've got this one and this one. So those are the main areas for me moving forward. If I get this arrow to move, yep, right here. 1, 2, 3, 4, and 5. Everything in between, a little bit more minor. Very key levels, 1, 2, 3, 4, and 5. At present, as I've mentioned, we're potentially seeing the break out of that trend channel. For me, I need to see a little bit more confirmation because we've broken out and instantly we're starting to reject. If we start to hold here, it's a very good sign that we're going to see another bullish press up toward these previous highs. Key resistance, key resistance. If we're breaking up above, looking for the bullish bounces. If we're breaking up above, looking for those bullish bounces, but just being a little bit cautious around this gap area, which very often acts as support and resistance. Okay, let's move on to Euro US dollar. Okay, so now let's have a look at Euro US dollar. So with this market, what we can see is we have been rejecting multiple times. 1, 2, 3, 4, 5. We've also been finding support 1, 2, 3, and we're just dragging along here on 4. So we're in a bit of a sideways range. But what I'm really looking at is how this market has been, let me get this right about here. We've been testing at resistance, resistance, resistance. We then tried to break up. We failed, we came back down, and we're once again squeezing down this trend line. Now, if we add in an area of support right here, the test, 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 false breakdown, multiple test, and then we're squeezing against it. We are having a price squeeze. So it's very likely next week we're going to see some sort of a breakout on this market. So coming into next week, we really want our sloping support and resistance line and this key support line to give us a basis for our trading zones. So let's get rid of this. Now, looking for the key levels really. So we're at 1, 2, we could almost say 1, 2 to 90, 1, 2 to 900. So basically 1, 2, 3. And then we're down into this level right here. which is 122.56. It's a very key level on this market right here. We're basically just squeezing against it now with this sloping resistance line. At present, it's still looking like support. If we see breaks down from this level, it's definitely worthwhile, especially next week, looking for resistance and moves down. You could potentially bring this one down a little bit. 122.440. The reason for that is because we've had this previous little swing point holding on this level. We've had this one testing as we broke down, spiking up. So it's really telling us that it's not broken down below. It's still trying to hold contact with the level, and then we break up. And we're testing as resistance. Here, you can see the close of the candles. They're all popping back up into this level. It's giving us that clue that this is the main area. Let's get rid of these lines like this. So, coming into Monday, Tuesday, Wednesday, we're going to be pressing right up against this level. Worthwhile looking for that resistance. If we start breaking up above the pullbacks and the bullish continuation, it's all lining up with the squeeze. So the break either way, it makes sense, especially as day traders, to look for those reactions. Even if it's a false break on the daily time frame like this, as a day trader, you can very often still capitalize on it. If this one's coming back down like this, you can see the market spurting back up. If you were looking for the breakout and then a retest, sorry, that's just shrunk, and then a retest, as a day trader, we can still jump in to the market, benefit from what we're looking at, and then get out again, because we're doing our analysis on the higher time frames, and we're using the larger movements that people who trade these higher time frames are looking for, so that we can jump in and jump out. We're riding the coattails. We're just sort of jumping onto the back of a bus for a few stops and then jumping back off again before it reaches its destination. It's almost like it's almost like being a sniper or something. You're just looking for the perfect shot. You're jumping in, you're jumping out, and that's it. So down below there, key levels, they really start at 122 really. All the way down to, I want to take into account that spike, 121,500 right here. So if we're seeing the breaks down from this level, looking for those moves down into that area, if it's going to be a false break, it's very likely going to come from there, looking for those bullish bounces. Also, after the breakdown, if we see the bounce back, again, it's worthwhile looking for the weakness once again. Because if after a breakdown, very often you see the retest and then the bears stepping back in once again. Because a lot of people, they don't like to buy breakouts because they're very unreliable in most cases. So they wait for the retest. If the market holds, then they look to get in with their money. Now failure's there, and then really the market's coming down toward 120.95. All the way down to 120.55 right here. This would be the next key level of support down here. Now, if we start breaking up, where are we looking? Well, there's a couple of pretty key areas sitting up here now. We've got one sitting right here at 123.70 down toward 123.35 right here. So again, if we see the break up, it's worthwhile looking for the bounces up into this level, but then also potentially that weakness for the market coming back down for the retest. And also we've got to remember it can be a false break. So the market may just come down and crash back through, or come down and then crash back up once again. So main level is this one right here next week for the break of that sloping resistance and key support. And then these levels down below and up above for looking for the retests, potentially, and then looking for the bounces once again. Now up above that level, we've got this whole section right here, but really, if we're starting to break out of this and this, it's very likely the market's coming up toward, let's mark this in properly, 124.40, all the way up to 124.75 right here. So those are the main levels for next week. Key things we're looking at is this potential price squeeze. It's been ranging sideways for quite some time, but we are starting to now squeeze against this sloping resistance and this key support. So at present, really it's holding as support. If we see the breaks down, looking for resistance and the moves down. If we see the breaks up, looking for the support and the bounces up. Next level, key level here and here, looking for the potential retraces. And really if we start breaking through either of these, then this one I'd be expecting to move down toward the key level down below. And potentially really we'd be expecting this whole section down here to be tested in the medium term. A break above this level, I'd certainly expect to see a retest in the short to medium term of previous highs. Okay guys, that's everything for Euro USD and the video. As always, I hope that was helpful. I hope you all have a great trading week next week. I'm James Orr and thank you.